All right, so as traders, what we're basically doing is looking for reasons to buy and for reasons to sell. That's what we do basically as traders. It seems my screen is lagging. And there's one common rule. There's a common rule that most traders would know. And we are told to sell when price is high. So you sell high and then buy when price is low. That's what we're told to do as traders. I'm looking at the screen from another device and it seems it's slower than my voice. All right, so the question now is, if price is moving up somewhat like this, the big problem is I'm waking up on Thursday, I'm coming to the chart Thursday, New York open like we are right now. The question is, are we high or low? Right, we're here. Are we high or low? It's a big issue, especially for people who have this mindset that I must trade every single day. So if you have a mindset that you must trade every single day, you need to begin to look at, okay, do I want to buy or sell? So is it high or is it low? As at where we are now, it's a big issue. I'll show you an example of what I mean. Let's look at, let's look for a regular chart, something like this. And okay, so here we are. Am I high or am I low at this point in time? Where we are on Euro GBP, I want you guys to put your answer in the chat box. Do you think we are at a high point or at a low point? If we are to follow this principle of sell high and buy low, where are we right now? Are we high or low? Anybody, please. Okay, Sadiq said low. Mr. Cash said low. Izodua, Lester, everybody is shouting low. And Okaribo even went ahead and added a big grammar. I say, obviously low. And somebody had a different mindset and say, we're ranging. Right? Okay. I'm going to do something. Let's say we maxed out this area. Let's say we maxed out this area. Uh-oh, somehow I can't seem to get it to do what I want it to do, but I guess you get the gist. All right. Let's say that area is maxed out. You aren't seeing anything there. You're just seeing this. Will this be high or low? Right? Most people would have said, obviously, the answer is low. Right? And at that point in time, you would be thinking of possibility of buying, and you might be right. But here, price continues to drop. So it's a big issue, right? At this point, you were still thinking price is low, and then you should be thinking of buying. I would have thought likewise, and then price continues on its way down. Now, where price is at this point in time, we are still thinking price is low. And when price is low, we should be anticipating buys. I won't be surprised if we come back next week, Thursday, for the repeat of this, and price has dropped lower. Again, price will as well go higher. The point is, back to our initial question, how do we know where we are in the chart, right? And that question cuts across practically every strategy, almost every strategy. If you use Fibonacci, what you're trying to locate is how are you high or low with respect to the last wave down. You know, we're all looking for high or low. Now, there is a popular, well, I won't call it a popular, another terminology people use to replace high low. They call it discount or whatever. So some people will say, if just a minute, please, let me see. Yeah. So let's take a scenario. Price is coming downwards. Price on its way downwards, right? As at point, let's use 1, 2, 3, 4, 5, 6 to delineate this point. At point 3, if you want to sell, let's use buy. Buy will make the picture clearer. I think I should just go to TradingView. TradingView give us the tools to use for this. All right. So at point 0, you didn't know what price was going to do. You are practically not too sure. So let's say price now, gravitated to a point A, and then you had the opportunity to buy here, but you missed out on buying. Maybe you were even selling, and so you lost the trade. Now price is moving upwards. At point A, you don't want to buy because you feel price has extended a bit and you want it to come back down. Anywhere between point A to B becomes a discount. Point A is expensive. Any dip in price below point A becomes a discount, a cheaper price for you to enter for your buy, right? So for a sell, it will be called a premium. You want to sell at a higher price, which is a premium, right? So you would be looking for reasons to buy at points A to B, right? Anywhere between A to B, you'll be looking for reasons to buy. Once price goes above point A, again, you would say, oh, price is now expensive. So at that point in time, you are saying price is expensive. You are a little bit cautious trying to take buys here, except you have a strategy that helps to catch some continuation trade. Last year, we did something on inside bars and like, right? So, but when price continues to make its move down and goes lower than the highest point it has ever gotten, you see it at a discount. Like Bitcoin is at a discount presently. There's every likelihood that sometime in the near future it will go back to its all-time high. So buying it at this point in time is a discount, right? So, yep. This is one way you can tell yourself where you are in a chart. This is one way you can use to find out if you should be looking for buys or looking for sell by virtue of where you are on the chart, right? However, this method comes with its own complications, and I will explain that to us now. Right? So let's look at this. This, for instance, is a H4 time frame. In a H4 time frame, we see this bullish move. When we go down to a lower time frame, like M15, M30, if even, and even lower, like M5, you find that in this drop down, it will look something like this. It will look like a downtrend in this move to the downside, right? Point A to B looks like a downtrend. Here comes the confusion. I am looking at price from a 15 minutes, 5 minutes time frame, and I'm seeing a downtrend. And then I'm looking at it from a H4 time frame, and I'm seeing an uptrend. The question is, what is the trend? So I'm throwing it back to you guys, right? Let's say you can't see point B, you can't see point B to C, and what you can see is points, all of these points. Okay, I think I know what to do. Let's move this here. So it meets our criteria for defining a trend, because you need to have 4.2 points, higher highs, and 2 lows, higher lows, to say you are bullish. So let's say you don't have points D to E. I want to ask us again and type your answer in the chat box. At this point C to D, what is your trend, right? Or where are you in the market? Are you at a premium, a discount, or whatever? Anybody, please put your answer in the chat box. Are you high or low? Basically. Somebody say you're at a discount. What if you are looking at it from 15 minutes time frame? Okay, I'll rephrase my question. I'll stop sharing just for a moment so you can't see what I'm trying to do. I'll stop sharing just for a moment and look for a perfect example to explain what I'm saying. All right, guys, I'm going to share my screen right now. Bear with me. Okay, guys, here is this chart. What is the trend now? Are we high or low here? Should we be thinking of buying or thinking of selling? Or what is the trend? What is the trend? Basically, just answer the question to what is the trend right now? What is the trend right now? We're looking at this GJ. Yep, thank you. Udosti Sadiq, thank you. Thank you very well. Thank you very much. We are in a downtrend based on what we can see on our chart. So when you're in a downtrend, you begin to look for reasons to sell, right? Okay, so this is what I'm going to do now. This is 5 minutes time frame. I'm going to go back to 4 hours time frame, and I want you to tell me whether you feel we should still be buying or selling, right? Boom, 4 hours time frame, right? So in the 4-hour time frame, what do you see? In the 4-hour time frame, what are you seeing now? It's buying on the H4. It's an uptrend on the H4. If that is not the definition of confusion for a trader, then I don't know what best suits that definition for confusion. Oh, well, let's go back to daily. Let's see daily time frame. Oh, where are we in daily? Daily is also supporting us to buy, but how come 5 minutes was giving us something different, right? We might even go to weekly. We might even go to weekly and see. Oh, weekly is also supporting our buy, right? But 5 minutes gave us an impression that is a downtrend, right? So having been around traders for a while and having had the opportunity, the favor to talk to traders and try to coach them, one of the biggest issues aside psychological problem is the fact that sometimes we get lost in the chart and don't know exactly where we are. We don't know where we are. Are we selling or are we buying? And if you hold the policy or principle I hold, never to force anybody to master a particular strategy, because we are all wired slightly differently, and some people markedly differently. You know that it's going to be difficult. It's like forcing a square peg into a round hole just to, plug it off. When you have that kind of mentality and you have some people learn under you, the confusion that could come when you put all of them together is that one person is seeing a buy and another person is seeing a sell. And they are all right in their own way. Based on 15 minutes time frame or 5 minutes time frame, as we can see on the screen, we are in a downtrend. Whereas somebody trading off the 4 hours is in an uptrend. When you are in an uptrend, let's come back to this point and take all of this out. If you're in an uptrend, sorry. If you're in an uptrend, you are looking to buy at discounts. You are looking to buy at discounts in an uptrend, right? And if you're in a downtrend, you are looking to sell at premium. At every premium, you're looking to sell, right? So price goes back to a premium, you're looking to sell. Eventually, price will go and you might engage a sell and price won't come back. And then price would have changed to a buy because it will give you a low, a high, a lower low, or a higher low, I beg your pardon, a higher high, and then now you are confirmed in an uptrend, and then you begin to look for reasons to buy, right? The challenge most times is that if you do this without defining your time frame, right, what we will call a time frame of reference. So hopefully by next month, we would have series of videos starting from the scratch so you can invite your friends who know nothing about, well, not nothing about Forex. We won't teach peeps, but we'll break the strategy, and so that we won't have issues with some of these guys coming to bug us that we're stealing their terminologies. We are going to recoin all of the terminologies, right? We will recoin everything and give them our own Simply Peeps name so we can breathe in peace. You need to find, you need to mention, you need to have a time frame of reference, TFR, right? So two people can trade opposite direction, and we like saying it in the fostering program. Buyers and sellers can be right, buyers and sellers can be wrong. It all depends on what time frame you are looking at and where you enter from. What time frame you are looking at and your entry. Entry is one of the most important things about trading that most people don't look at. If you've ever backtested on MT4 before, you discover that starting your backtest on a particular day or starting your backtest 1 week or 2 days earlier or shorter could mean that the month will be a losing month or a winning month, right? Timing is key. So you're looking for where you are. If you want to understand where you are, first question you should ask yourself is, what time frame am I trading? For most people, they have one time frame where they get their trend bias. So they get their trend bias from a higher time frame. Then they go and look for an entry at a lower time frame, right? So we're going to look at that together now. How do we put these two together? Looking for your trend on a higher time frame and then your entry on a lower time frame, right? So let's see that. So you are trying to discover your trend on a higher time frame. Let's say your trend is bullish, right? So let me use a darker color. Your trend is bullish on the higher time frame, on its way to the upside. On the lower time frame, you will get something like this. And what we discussed in Simply Pips in the past is that the guy who is trading off the lower time frame will find a sell in this move to the downside. He can use a trend line. He can use anything he wants to use. He'll still find a sell, right? The guy trading the higher time frame around this time is taking a break. And he may take a break for 3 solid days, if not a week, depending on the higher time frame. He isn't trading this pair. He might be trading another pair. But at this point in time, he's no longer interested. Once price went above this level, right, the previous high, he begins to get cautious of continuous buys. That doesn't mean he won't enter a buy, depending on the strategy he's trading, but he's cautious. Once price dips, he's now willing to buy because he's looking at the higher time frame. He's willing to buy. Most people will wait for price to break, in this case, a trend line, or create what we call a shift in market structure, a break in market structure, for them to now resume the buy to the upside, right? So they need to wait for a realignment of a lower time frame to the higher time frame for them to take a trade. That's one way you can know precisely where you are in the market. It doesn't mean you won't have losses, but you won't be forcing a buy when price is highly extended, overbought, like some people will say, right? The same happens for a sell. Now, note, somebody has been buying, let's say from here, as at this point, the guy is in profit and is perhaps is still buying. Another person comes in at this level and is selling. And depending on their exit, entry and exit, the buyer can make money and the seller can make money. The seller, knowing that is trading from a lower time frame, needs to have a trade plan that gives him or her an idea of when to get out, either an ADR or something, right? Or ATR, whatever, to give you an idea of when to get out, right? Because price may just make a U-turn to the upside. I'll give us an example on the chart so you see what I'm trying to pass across. Again, when you come to the chart, when you drop your charts, which is why we don't take buy signal or come and buy this now in Simply Pips, most people will just laugh at you. You need to tell us why. We need to see why. If not, we can be quiet for 2 weeks. It doesn't mean we are sleeping, right? We're trading on our own somewhere. I'm going to take you back to this chart. And let's pick one of our C5 pairs. Let's pick one of our C5 pairs. Let's use GJ as an example. Let's use GJ as an example. Okay. GJ. You have GJ here. Yep. Okay. So if you've passed through the fostering program, you know we introduced you guys to basketing. And the idea is that we can look at only one chart, and use that chart to trade about 9 pairs, right? We don't have to sit in front of 9 pairs to monitor them individually. We can practically just sit down on one chart and then trade 9 pairs straight up. 1 minute, guys. All right. So, and we had various ways of looking for whether we want to buy or whether we want to sell. For the purpose of the discussion here today, we would use this indicator that turns green or red to delineate our buy or sell bias, right? I need you to understand what I'm trying to drive on. Number one, we're looking at where are you first. Let's look at that. So on this chart, on the H4, I'm going to put a line here, a horizontal, a vertical line here. I'm going to change it to green to delineate buys, make it thick, and it's going to come one candle after the big dot, right? So I have another candle, another line, and that's going to be red, and it will be coming up here. This is what we want to use to delineate whether we are buyers or sellers, guys, right? So I want you to see this. Based on this, we would have been buying from this line, and we would have been selling from this red line. I want you to just get that concept first. We are using this to determine where we are. Where am I? Where am I, right, in the market? So I'm going to go down to like a 30 minutes, a midpoint or somewhere in between. And the date here happens to be 15th of December. So I'm going to go to 30 minutes, and I'll be going to the 15th of December. So here was when we got the buy signal. right? This was where we got the buy signal. You would notice that on the H4, we got a buy signal, but the H1 had told us to buy early. The H1 or the M30 would have told us to buy earlier, right? So for the guy trading off H4, buying around here will be the right time for him to buy because it's not extended yet. But the guy buying off the M30 at this point is feeling, oh, price has extended too much, right? So there's a confusion somewhere, which is right and which is wrong. You need to know what time frame you are playing off of, right? So if you understand HPLR and you've been following us long enough, you would know that this is an HPLR trade for a buy. Price came, took out Asia low, gave you a candlestick pattern of closing above the lowest bearish candle. And if you took that trade, unfortunately, I have not set up my fib on this system. Push. Right? But if you took...
That is 10R.
That is like 10R, right? Great. So where did we get our entry from? From H4, right? It could give us 10R straight up. Again, what did we do? We didn't do anything too complex. We only tried to discover where we were. Now, look at where we entered, that small spot there. That was where we entered. This is the 10R. When we got this 10R, can you see this massive drop to the downside? Massive drop to the downside. Again, let's go back to 30 minutes. Let's go back to 30 minutes. I want you to see something. See that massive drop, guys. See that massive drop on the way to the downside? The guy in H4 is still going to be looking for buys. So what will happen? The guy in H4 will take a buy here and lose the trade. He will lose gallantly, right? Because price pushed up and then dropped. Meanwhile, the guy trading off 5 minutes or 15 minutes or even 30 minutes will be selling, right? If you're using this indicator, it would have even told you to start selling here off 30 minutes. But the guy trading off 15 minutes or something might have entered for a sell way beyond, way before this, right? Again, if you're using lower high, lower low, you will clearly see that progression. You clearly see that progression telling you you should be selling. But the guy trading off H4 would have attempted to buy here if the person is using HPLR, and that person would have hit a stop loss. And that same day that he hit a stop loss, somebody from AQZ group, somebody from Simply Pips group, somebody from BTMM group will be shouting, GJ, I just hit TP3, smashed, bazookaed, and destroyed. And if you are trading off H4 and you lack, I mean, especially if you are like 1 year in trading, and you just believe anything that anybody posts in any Telegram group, you'll be reconsidering your strategy. And I tell you, if you reconsider your strategy, you enter for a sell the very next day, you are going to lose heavily. When the guys on 30 minutes are selling, look at this thing, it's still red. It is selling in 30 minutes. Around that time that the 30 minutes guys are selling, one guy who is very bold, claiming he's trading off 4 hours, will be entering for a buy here. Why? It took out Asia high, it closed above the lowest candle, and it took out Asia low, closed below the lowest candle. For those of you who were in the first 2 scalping sessions, I'm going to do the 3rd video very soon. You know what to call fractal. It took out some necessary fractals at the key time, price, time, agreement. You'll be entering for a buy. The guy that is on 30 minutes is selling, and he has made money. And you don't have the right to tell him that his strategy is wrong. You don't have the right to tell him he's wrong. The only time you can tell somebody that the person is wrong is when the person opens a $1,000 account and blows it continuously. Then you say something is wrong with you. And most times it may not even be the strategy. It might be the person's head. So if you go to Simply Pips and pick out my profile and check my bio is fix your head first, right? The guy on H4 will start buying from here. The person that told me how many R for the previous one, how many R will you call this now?
250.
Now which school you go? Right? The guy trading on 4 hours will enter a buy from here. Note that the guy lost here, which is why in Simply Pips, we don't come to say we don't lose. We accept that we lose. We say we lose gallantly. But when we win triumphantly, right? Triumphant is a bigger word than victory. We win triumphantly. But the guy trading on H4 is selling and is making money. On M30, I beg your pardon, or even M15, look at that. This is a downtrend. And the H4 guy picked it up from that point, and voila. If you use proper risk management, even if it is 0.0, even if it's 0.5 you use, you should be halfway done with your MFF or FTMO. But notice, guys, notice. This guy took a buy from this point, might have gotten off somewhere around there, and if he didn't get off, sorry for him. But notice, this guy will not get a new trade for some days. Let's look at that. The guy trading on H4 will not get a trade here, day one. Or even on day 2, he got one and lost. So for 2 days, this guy didn't get any positive trade. During those 2 days, every other human being on the planet Earth is posting winning trades. But this guy has no trade to take. Eventually, when he got one towards the close of business, it ended up in a loss. But because this person knows exactly where he is in the market, I am looking at H4, and my H4 is bullish. Every drop below the highest point is a discount, right? But we have another way we measure out our discount, right? That we will not be explaining now. But for those of you that have been in Simply Pips for a long time, we find yesterday high and low as point of discount. The guy and Asia high and low. So the guys trading Asia high and low would have gotten a trade here. This would be the first trade for the guys trading Asia high and low. The guys that are looking for weekly lows, they are looking for yesterday low. They have nothing to do with Asia high and low. They are only looking for yesterday low. They won't enter this trade. They'll wait for it to take out this low first. Therefore, these guys will not trade for 1 day, 2 days. They will just be coming here to trade. Why? This took out Asia low, took out yesterday's low. This is their entry. These guys will not touch this trade for 2 solid days, even though it is printing a downward trend, because they trade H4, right? Meanwhile, the guys trading M5, M15, M30 will sell and they will still make money. Why are we arguing which strategy is better than the other? Why? What is the essence? There's one reason why we can teach practically almost any strategy for free in Simply Pips. Because learning the strategy hasn't changed, it's good, but strategy alone isn't it, right? So let's go back to H4 again and see. So now we just discussed this move. We just discussed this move, right? Powerful. We had one losing trade, 1 R, and we got maybe 10 R and another 5 R from the previous trade, right? So let's say you have a fixed RRR, 1:4. You've gotten 8 R's and you lost 1. You are still 7 R up. Not a bad day. Not a bad day. But see a bigger confusion. Now, price has taken out the previous high. And you are now confused. where am I in this market now? Am I high? So for some of you, if you remember the first test I gave you guys, when I said, are we high or low? And you said we were low. We were looking at EG that point. We were looking at EG then. Woo! NZD USD to the rescue, guys. Again, I might have opportunity to show you why I took that trade later on, but let's leave that for now. Let's go to EJ. Let's go to EJ. Oh, okay, EG, I beg your pardon. Yeah, so you guys said EG was low. You should be looking for reasons to buy, right? The daily time frame is telling us sell. Do you want to sell? Do you want to buy against the higher time frame? If you go to H4, it's telling you that the trend is bearish. Do you want to buy against the higher time frame? So the correct answer would have been, I think just one person gave the correct answer. It depends on the time frame we are looking at. It depends on the time frame you're looking at. You can't just come into the chart and say it is overbought, oversold, or it is extended. You must know where you are. And you can't say where you are if you cannot mention what time frame you are, what time frame is your reference point, or what is your reference time frame. We need to find a way of finding anybody that can help me get name for all of those things, so we don't start using different terminologies. But I'm trying not to use some terminologies that has put us in trouble before. But I'm sure you get the gist. You need to know specifically where you are on the chart. So price has taken this higher point, and then we're looking for reasons to buy. But we said because we've extended, we might be careful of buying. Well, in Simply Pips, we gave you guys an alternative, a way to snipe in. In fact, AQZ also gave another one. And in Simply Pips, we collaborated with AQZ. Look, trade any of them. Now let's go back from this day. This is 22nd. We're going to go back to 30 minutes on the 22nd, and then we'll look at this. Right? So you took that buy all the way to this point and perhaps even higher. Right? The next thing you're looking for is, how will I take my buy? What did we say when we were discussing here? We said the guy that is buying will wait, will be buying when the guys in lower time frame is selling. He will be doing direct opposite. When the guys in the lower time frames are selling, that is the exact time the guy in the higher time frame will be looking for buy opportunities. One method. Second method, the guy trading higher time frame will be looking for alignment, which was when I wrote this, right? I used to do alignment before when we were doing LSB, but I discovered that if I start up on time, I might lose 1 or 2 trades, but when I finally get the win, it pays back like ×6, ×7, ×8 sometimes, right? Sure, if trading higher time frame like H4 and daily. So let's go back and see this. Let me clean up this. All right, so we bought and we kept buying, push up to that point. Now, the next day, lower time frame is selling. That is the exact time that the guys trading H4 will want to buy. And where is the buy entry? Right? This is the entry. He took out Asia low, HPLR, gave you a reason to buy, and boom, again, a winning trade. When should you buy again? When the guys in the lower time frame are selling. Where is their sell? This is the red, this is the red one. Right? Unfortunately, we might miss out on this. If you use HPLR, you will miss out on this buy here, because as at the time the buy signal came, we are out of our zone, right? We have another strategy that could have helped us to catch this, right? But for now, we're leaving that. We call that RC, the retracement continuation entry. The retracement continuation entry would have given us an entry here, but let's leave RCE out. You missed out on this buy, and there's nothing you can do about it. You let it go. You missed out on that buy that day, right? Here, you got a very good one. Again, took out Asia high and boom to the upside. Look at this day again. Bearish, it took out Asia low, I beg your pardon, Asia low again, boom to the upside. Then look at this day again. They were selling. Lower time frame is selling, higher time frame is looking for buy. It took out Asia low again, boom, you bought. Look at this day again. Lower time frame is selling. They can make their own money, no problem. You are looking at higher time frame, boom, you buy. Oh, look at this day, they are selling powerfully. And they sold throughout Asia session. It looked like hell is letting loose, but you are there looking for a reason to buy. Did you win? Yes. Boom. Oh, this day it played around with you, didn't really give you a reason to enter. Then look at this day, it just melted. You were looking for reasons to buy. You might have gotten reasons to buy here. You might have gotten reasons to buy here if you are not taking note of your higher time frame. If you are taking note of your higher time frame, you will not be looking for reasons to buy again, right? Except if you are using the third strategy that helps you trade both up and down. But for now, we're looking at trading one time frame. You're looking at one time frame. So you remember at this red line, we are now bearish, ladies and gentlemen. So at that red line, the example I'm using for you guys is telling us that we are bearish. Woo! So what do? Note, in all of this buy, the guys trading lower time frame made money in the sell. I'm going to show you that. We'll go back to that one later on, right? So here we are looking for reasons to sell. But rather than sell, what did this thing do? Rather than sell, it practically bought for 2 solid days. And we were looking for reasons to sell. So let's see what happened. You took a sell here. If you use Asia high, HPLR, you would have taken a sell and then you would have lost. And what do we say? We lose gallantly. You take a walk. What you just lost is 1 hour. Shikena. The guys who trade weekly highs will be looking for not Asia high, but yesterday high. And where is yesterday high? That's up there. And that's our line delineating yesterday high. Those guys will wait. And boom, price came to yesterday high around here. And then you took another entry and hit your stop loss, 2 losses. And eventually it gave you the right, another entry again. And then you got in and then you made back all the losses, right? You made back 1, it gave you another entry again, taking out Asia high, and you had 2 cells running, and they ran for how long? Look at that massive sell to the downside. So if you're in Simply Pips and all you are bothered about is not losing, even though we like you to like our channel, even though we want to grow our Telegram group, just quietly exit and go to another Telegram group. In Simply Pips, we lose and we accept our losses. But we take our wins also. In my first 2 years of trading, I had a very bad habit. And I don't know if it happens to you guys. If you are here, well, congratulations. Perhaps you might learn from my experience. I had a very bad habit. And the habit is that once I take 1 or 2 losses, I get very close to depression. And because my trading desk is very close to my, in fact, it's my bedroom and my bed is just by my side, I'm stamping on it now for you to hear. I just climb the bed, hold on to the pillow tightly, and sleep. And by the time I wake up, maybe I was taking a sell and I hit stop loss. By the time I wake up, the sell would have gone and my eyes will be red. My analysis was correct, but you know, things did just gel. I wasn't willing, I was looking for perfection until my mentor asked me one day, right? He asked me, he said, do you want to be right or do you want to make money? And I said, I wanted to make money. He said, no, you want to be right. It's because you want to be right. And anytime the market tells you that you are wrong, and you know the market is not, you are not bigger than the market, so that you can humiliate or threaten the market. You feel threatened and you just go away. He said, if you are here to make money, stay with your strategy. You backtested it. It tells you make money if something happens. Go in and get your money. So what was the solution for me? I had to reduce my risk. I used to trade 3%, 2% per trade. I had to reduce my risk to 1%. I had to reduce my risk to 0.5%. So if I lose 2 times, I've only lost 1%. But if I win once, I'll make 2% on 0.5 and back up 1%, right? Again, look at that. Powerful, guys. So if you're like me, you take a loss, then you simply start, you go to Telegram group and start checking all the 100 Telegram groups you have to see where you find the holy grail of a strategy. Because into Jobel, there's nothing like that. So you would have won this trade. Remember, we are still bearish, guys. So what happened this next day? Why they are buying in the lower time frame, you got your sell. You may or may not have hit your SL. And if you didn't, well, it came back to hit it the next day. Sorry for your loss. And then it dropped without you. Without you. Very painful. But it's part of it. It has gone. No entry for us, except, of course, you're using the new strategy that I taught using Fractal, right? You'd have gotten an entry. But what about yesterday? Whoop, good sell. What about today? What about today? Whoop, good sell. Guys, you see that? Is as straightforward could be. It's as straightforward could be. Now, let's go down to H1. Right? I'm going to remove all objects here. I'm going to remove all objects here. And I want you to see something. If you are trading off H1, guys, you're trading off H1. Because H1 is too cumbersome, let's start from December the 30th, right? And I want to do something. I want you to follow me. It might take some time, but just follow me, guys. So I'm going to put a red on every red spot where we have a resemblance of a reason to sell based off of what I'm using, right? You could have your own trend determining tool, right? You could have your own trend determining tool, but for the purpose of this discussion, I don't want to be using somebody's terminology before they hack down our channel again. Right, so those are reasons for us to look for a buy. Let's now go for reasons to look for a sell. Those are reasons to look for a sell. Let's now go to reasons to look for a buy. Right here, we're going to delineate this blue. So, guys, boom. Buys. Buys. Follow me, guys. Follow. This is demystifying the whole thing. If you are buying a course, you know what you're buying. So we're starting from 3rd of January. And this is 1 hour. 1 hour, 3rd of January is telling us to sell here. All of a sudden, he told us to buy. Then he told us to sell. Then he told us to buy. Then told us to sell. If your higher time frame is 1 hour, put in the chat box what you think your lower time frame should be. If your higher time frame is 1 hour, what do you think your lower time frame should be?
5 minutes.
5 minutes. So 5 minutes makes sense. So this is 3rd of January. Let's go to 5 minutes. Third of January. I hope we have data up to that point. We should. Five minutes, 3rd of January. Whoosh, something is wrong here. Okay, anyway, let's move on. Yep, so wait, 3rd of January, right? Why am I going to December? Yeah, that is it, 3rd of January, so nothing is wrong. 3rd of January, yep. All right. So you're looking for reasons to sell off of this. Now, automatically, you're looking for reasons to sell, and to make it even, we have to define what strategy we want to use, right? We need to define what strategy we want to use. So for the H4 cum M30 or M15, we used HPLR with Asia high or low, yesterday high or low as our point of reference, POR. For the M5, we could use HPLR too, but many times you will not get an entry. But let's play with HPLR. If it's not working out well, we'll use a different strategy, right? So we're looking for reasons to sell here. Obviously, there would have been no trade this day, right? Because there was no discount. This day, we're looking for reasons to buy. There would have been no trade because there was no discount. On this day, we're looking for reasons to sell. There would have been no trade because there is no discount. I hope you understand what I mean by discount. And this day, we're looking for reasons to buy. We might have gotten a reason to buy here if you're using HPLR, and that would have been a losing trade, and then price became bearish. So you can see that the same period, you're looking at a lower time frame of 1 hour, and you don't seem to be getting setups. And the guy trading on a different time frame is getting set up. This is a buy, right? The guy trading on 5 minutes would have gotten one entry here. It is stop loss heavily. Another entry here, it is stop loss heavily. And then another entry here for, at this point, it's even a sell. So that wouldn't have been a buy. This is red, so this is a sell. That wouldn't have been a buy. So if you are backtesting and you are using HPLR and 5 minutes and using this methodology I'm showing you, you could get to a point where you said, nope, this strategy is not profitable. So let's see if we can use another strategy. So I'm going to call up this. I'm going to add one more 0 to the max bar, and I'm going to turn this to 5. I'll say, okay. Boom. Boom, shasha. All right, so let's see how this will play out now. So where do we start from? Third. Right, so see this. So here, I'm looking for reasons to sell. I'm going to sell when I get a break and an F-boss. So here, this is my fractal. Price took it out and closed beneath. I entered a sell, right? It touched this fractal, I break even. It pushed back against me and took out my break even, but then took out this fractal and took out that up one. And then I begin to initiate a sell, and then this made money. So again, this is a winning trade. Why? This is a bearish trend. So I'm trading 1 hour from 5 minutes. Let's go to the bullish one. So it's an example. Yep. So this is the bullish one. It became bullish here. Price didn't come back to the fractal. Price didn't come back to the fractal. Boom. Price came back to the fractal here. And now I have my buy. And that is the buy up there. Winning trade. Price came back to the fractal here again. That's another buy trade. Price came back to the fractal here. That's another buy trade. While this is still buy, right? So you notice that the guy trading off of 1 hour might be switching his buyers for buy and sell several times within that month, whereas the guy trading off H4 remained bullish from 15th of December all up to 20th of January, over 1 month, and that guy kept his cool, right? The guy knew exactly what he wanted to do. So as we wrap up, the question is, where are you in the market? Let's summarize the things we covered today. We said you cannot say where you are in the market without, number one, telling us the time frame of reference. You must tell us your time frame of reference. Without it, we don't know what you're doing. If you tell us buy, like somebody came to the group and said, let's buy boom and crash. And I know simply people, as I trust them, the question they'll ask you is, where is your chart? Why are we buying? Why? We've tried signal groups, we've lost money. We are not looking for signals. Why? You must give us your chart. Let's see the time frame. Right? So once you've been able to identify your point of reference, then you need to be able to identify if you're in a discount or you're at a premium. Right? So discount meaning that you are low, premium meaning that you are high. You must be able to establish those two. Once you've been able to establish whether you're in a discount or a premium, using the examples I showed you guys today, we use the opposite color, right? Then the next thing you need to ask yourself is, what is my point of reference for buying? So for us in Simply Pips, we call it our liquidity points, right? So what's our liquidity point? We mentioned 3 liquidity points in this webinar today. Number 1, we looked at yesterday high and low. We looked at Asia high and low. And when I was giving an example of that strategy I haven't taught you guys yet, we looked at our fractals, right? The F bosses and the likes. So those are points. So until price gets to that point, I won't take a trade. No matter what happens, until price gets there, I won't take a trade. Right? So if price doesn't come to Asia high, no matter how deep it's looking like it is going to sell, I won't take it yet until it comes there. If I miss that day, let me miss it. Those of you who understand our basketing method, you know that it's almost impossible not to find a trade in one day. Almost impossible not to find one trade in one day if we use that. We have 9 pairs we are looking at, and we are all expecting them to go in one direction. Some of them will move without discount. Some will come back and give us the discount. So ladies and gentlemen, I'll pause this video right now so it doesn't get too long.